The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. Well, here we have October the 26th, getting ready to come into that very famous date. October 29th of 1929, big anniversary. Folks, I've looked at anniversary dates since I started looking at charts 60 years ago, and I can't find more than 2 instances where any of them ever came up the same. So forget about anniversary dates. I can promise you that. They talk about them, but they just don't happen. And very often. They do happen, but not very often. The first chart we're going to look at, of course, here is the chart of the DAX. As you can see, we've moved down quite a bit, which is not unbelievable because of the fact that we had such bad earnings for two of the big ones, Google and also with Amazon. But this is, you folks have asked me several times this morning already by email and a few by telephone of whether we are in for a crash. I don't see that at all. I think this is a normal correction that we've been looking at. If we take a look at the German DAX, these markets have been going down for quite some time, folks. Oh dear, give me 1 second here so we can get this up here to take a look at it, and then we will move on to the next one here. Uh-oh, I did something wrong here. Let's see what I did wrong. Okay, back in business. Okay, did the DAX chart or the FTSE chart fit okay? I guess it did, yeah, or we're all right then. The next one I wanted to show you, here's where I think we are, and let's just put this up here. Remember, we've been going down since sometime in September, early October. In fact, there's only been 1 day since September the 26th where the market had 2 up days in a row, which is in fact highly unusual. But this is what we're looking at. You'll notice after yesterday we made an ABCD pattern up at that 70.76 in the NASDAQ. That was equivalent to that 27.18, 27.23 we had in the S&P, and then we've come down and made a new low here. But I think that we're more near a bounce than anything else. That's the way I see it. The fact is, it may come sooner or later. I don't know which, but I do not believe that this is a crash scenario coming into Monday, October the 29th. I just don't see it that way, but that's just my 2 cents worth. Folks, if you ever want to really understand what happened with the crash of 1929, all you have to do is find a little book called Only Yesterday by Frederick Lewis. This little paperback book I bought at a book fair in New York way back in 1970. Oh gosh, 74, 75. No, it was 76 because I'd been working with Drexel for a few months, and I was back there for something I forget, getting a license or something. But anyway, I found this little bookstore in. It was a book fair in Greenwich Village, and I bought this little book for 10 cents. And oh my gosh, it's just an incredible little book. It really describes everything that happens during 1918 through 1932, 35 area. And remember, folks, when the stock market topped on September the 3rd, 1929, it went into a 3-year bear market, which was known as the Great Depression, that finished on July the 8th, 1932. Remember, in 1929, that was known as the Roaring Twenties. This was the time when we had some of the greatest inventions in the history of mankind. Let's just go through a few. Electricity, telephone, the radio, indoor toilets, the automobile. There were 2,000 automobile companies in the United States in 1929. It's just amazing all the things that were going. That's just a few of the things, but it's just really an incredible little book. Oh, they're selling it for $12.75 on Amazon? Really? It's a reprint? Shut the front door, Marshall. That's Wow, that's a pretty good price. I think you could get it. I mean, it's not 10 cents, but it's certainly worth 12.75 if you understand the history. Let's just go through quickly. I've got something really important that I think that we need to cover, but I wanted to go through quickly the scenario of the crash. The market topped on September 3rd, 1929 at 383 in the Dow. On October the 29th, a month and a half later, 6 weeks, they had dropped from 383 down to 180. That was a 50% drop, and basically it wiped out everybody but margins and all that stuff. The market bottomed, I believe, on November 10th or 11th, another 10 days later. And then from the November, it rallied for 4 months into the early April to almost a perfect 61% retracement. And from there, the Dow Jones Industrial Average eventually bottomed in 1932 on July the 8th at 42 and change, I believe. It might have been, Basil has those numbers better than me. So anyway, that's what happened. But I don't see anything like a crash coming right now. We're in the top that we've seen. I will never see that top taken out again. I believe that in my heart. I believe that without any, even if I live another 25 years, I don't think that high will be taken out. But we're going to have some tremendous swings in here. That's the real key here, is what we'll be watching are these really great swings. Now, if you remember when we were watching some of these FANG stocks, let's just get some of these up here just to see if we can get one here. Here's Facebook. We'll just get it up here. These are ones that we were talking about before, just to show you that there's nothing new. Facebook is now trading at the yellow part of that arrow. It's trading there this morning, 145.42. I just saw the price on it. So that was a lucky one. Let's take a look at a couple others here just to see if any of these things are doing anything. Apple is still holding up extremely well. It's trading around I think 214 or something today. That's still acting relatively good. That bottom has not been taken out. Netflix, here's another one that's been wilder than a March hare, and you'll notice that it too has held up at some of those levels. And then we want to look, hope we can get a Google and some of these others in here that we've been waiting for. Okay, yeah, here's Google, and now we've already exceeded this onto the downside. Let's just get this up here so we can take a look at it. Google this morning is trading at around 1,050, I believe, something like that. That completes that. No, it's even lower than that. That completes the second ABCD pattern from September, the rally at the 382 into October. That should come in at around 1020. I don't know where Google's trading right now, but that's another one that is coming right in. And then finally, Amazon. This is a really interesting one. We'll put this up here because you'll be able to see Amazon today. If you'll do the ABCD structure on this, from the high at 2,000 down to 1,700 up to 1,840, that brings you down to right around 1,600. I don't know where it's trading, but those are the ones. So these markets are completing patterns here, folks. So, and these have been the leaders of the pack. So I don't think there's anything, really dramatic that's going to happen. I mean, it's going to be wild, but this is what we like. Wild is good. You like to see these wild patterns. So. We'll take a break here, and then we're going to cover the gold. Gold's the interesting one today. 877-927-6648.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary Power Law Vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of the Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked, money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find the Path of Least Resistance under Trading Newsletters. TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, folks, before we get to the gold, I want to go over the, we've had several requests about looking at Deutsche Bank. And if you'll notice here, this chart has got a lot of really great information if you're interested in technical analysis. Let's start at the very top over there in January of 2017, when Deutsche Bank came out and offered their stock at a 35% discount. It was trading at 20. They offered it at 17. Now look at where it says special from the U.S. Federal Reserve, June 29th, 2018. Deutsche Bank is on dangerous watch list. It rallies 25% from 2050 all the way up to 13, right in the midst of that, stops exactly at a 61% retracement. And now you see we've broken down below that key level. We gapped down below it. And that tells us that Deutsche Bank is heading to at least $8.80 per share. So that's what we're watching here. The reason why I think this is important, for two reasons. Just because the Federal Reserve says something, if the market's ready to rally, it's going to rally. But the most important thing is, anytime anybody offers you a discount on something and it appears too good to be true, you can assure that it is. So just be very, very careful, folks. Anyway, let's move on just a little bit. There's a couple other quick things that we have to cover because people have asked us questions, and I certainly want to try to, answer them. They're kind enough to send those in, and I wanted to be sure that we do take care of those. The next question that we had is about, where is it? Please pop up. I had it right here in front of me. Oh, it's the hog market. Doggone it, what did I do? Anyway, the hogs are acting pretty good. They've moved substantially off of that. There they are. Hold on just a second here. Let's get it up here, and we'll get it up here. We were looking at the hogs there at that 5150 level. They've rallied pretty good up to this 78% level. What you want to do is put your stop up at around 55 now, and really not worry about it. So we'll see. Someone's asking a question. PA, if it fails at double top, I don't know what PA is. Ruby, you'll have to. Is that a stock? I'm not even sure. But okay, let me get into this gold stuff. Let me just show you what happened yesterday, folks. This is a market. Remember yesterday in the stock market, the stocks went up 500 points on the 25th of October. Look at this stock here, folks. This is the gold silver index. From the very beginning of the day, even though stocks were rising 500 points, you'd had a 6% drop in the gold silver index. 6%. That is huge. If you take a look at this on what it really looks like from a technical standpoint, you're going to be relatively surprised, I believe, because it's humongous. We haven't had a move like this. Look at this. You have a beautiful ABCD pattern, and then you have a collapse. Folks, gold was rallying, and silver was rallying all during this time. What's wrong with this picture? What am I not seeing? I mean, this is just I'm just at a quandary to see. It must be that the gold is really worried about the the potential of what's going to happen to the rest of the markets. But I don't believe the gold is a flight to safety anymore. One of the things that you have to consider, well, there's a lot of different things to consider, but let's take a look here. The correlation between that XAU, the gold silver index, and the gold price itself is better than 95%. So just keep an eye on this. Okay, here's something that is really important. This is from our friend Steve Rhodes. And this basically shows the different patterns in the different currencies. The first one is the US dollar. As you can see, we're completing an ABCD pattern right here. You go to the gold and euros. If you'll notice, between July, August, and September, that is an absolute perfect three drive to a bottom. And since that time, it's had a huge rally to the upsides. It's now expanding and made the 61% retracement from July. You'll notice that the gold and yen is a little bit different. And then you'll notice that we do have a three drive pattern in the pound sterling. But remember, the gold is in dollars because 53% of the world is done in dollars. The rest of it are the other currencies. So that's why I think it's so important. But anyway, whether that means anything or not, we'll have to wait and see. But when you see a market that can't go up and is pounded that badly, when the rest of the market is going straight up, boy, people really want to get out of that. And with the market opening lower this morning, that means that it's probably even going to gap down. So I don't know what'll happen to that, but it's a very, very interesting pattern, to say the least. So we want to thank our friend Steve Rhodes for sharing that stuff about the different currencies, because you see different patterns in those, because it costs more to buy the gold in euros and pounds than it does in US dollars. And of course, with dollars, you're getting a huge discount because the dollar has been increasing. So that's a good thing. Okay, let's move on to the next question that someone had. We covered the Deutsche Bank. The next one we wanted to talk about, of course, was the banking index, because this is the pattern that we're looking at in the banking index. We are right at the target, folks. We've got the ABCD pattern coming in here, so we should be at some type of a tradable bottom here in these things, and I think that's what you'll get. You'll get a tradable bottom, and then we'll move on, to what the next thing will be. But this is the first leg down. Whether we're going to finish it here or Monday or Tuesday or whatever day it is, whenever these patterns complete. But they still have some more to go to the downside, but they're still very, very close. That's why there might be a collapse type scenario, but it doesn't appear that that's what's happening right now. And one of the main reasons that if you were looking at fear, and I don't think the gold market that's a very, very small market. I mean, that's really not very much at all. That's not where the players are. The players are in the bond market. And if you take a look at the bond market here, here's what you're seeing in the bond market, which we know is by far the most bearish of all. We're up at that 61% retracement up there at 139.11. The high has been 139.16, I believe, in the middle of the night when the Dow was down 300 and some, and now we're trading a tiny bit below that. But this is a long-term bearish chart. This is like giving an arsonist gasoline to put out a fire. I mean, you don't want to buy junk, and well, it's not junk, but it's just in a very bearish market. That doesn't mean that interest rates can't rally some more, but this pattern is not telling you that there is a is the same thing that you're looking at. In other words, you don't want to see that particular got off track. Someone posted something that I was reading, and I can't walk and chew gum at the same time. But you got to be really careful here in the bonds, because there is a possibility that they could rally a little bit more. But I don't believe it'll be due to a panic of any kind, because it doesn't look like that. So that's the main thing. I don't really look at palladium, Ruby. I'm sorry, I never looked at it. I don't even know where it's trading, and I don't even put it on my list, so I'm sorry about that. I do platinum and some of the others, and if you look at, just since we'll be talking about platinum, it doesn't look very bullish either, because you can see here that platinum topped well over 2 weeks ago, and we're trading down again today. That high that we made up there at 854 was a 382 retracement of the high way back in January, and it was also a 61% retracement of the high made in June. So that's just an ABCD correction. So let's take a break, pay a few bills. We'll be right back. 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and I posted a chart of the natural gas contract. We've had a request, and if you'll notice that we're almost ready to break down, heading towards the 302 level. Folks, this is a really great contract to trade. The margin is relatively small, and the liquidity is terrific. Your fills are very, very good, and it follows the patterns and the ratios that we look at extremely well, much like most of the things that we do trade. So keep an eye on this one. This is a really interesting one, especially if it gets down to that 302 level. There's going to be quite a bit of support coming in with a lot of patterns telling you that they're coming together. If you do the work, you'll notice that there's a whole bunch of ABCD patterns that lead you to the conclusion that it's going to 302. So just pay attention to that one. It could be something that is very, very interesting. So we'll see whether that happens or not. Now, the big thing that's happening today, of course, is the currencies. We're breaking down into euro, much like we've been saying for quite some time. We've been quite bearish the euro, bullish the US dollar index for quite some time. And we're getting very close to what we think is going to be a pretty significant spot to look at. Now, let's just quickly look at the just give me one other thing to look at here. Let's look at the euro first, because I want to show you why we're so important. This was the one from Friday, and we're almost at the 113 level now in the euro. There's a possibility that that could be a double bottom, but frankly, it really remains to be seen. And then also we have this weekend coming up, so any move below that 113 level in the euro really sets up, well, actually below 112.90, well, 112.90, 113, same difference. You're going to be breaking the 382 ABCD structure, and boy, that's not bullish for the euro. That tells you that you could be looking at something very, very sinister in the euro. In other words, move to the downside. That means the US dollar would be rallying a great deal. If you remember, from last week, we were talking about the move coming to the upside in the US dollar, i.e. lower euro and pound. You'll notice that we're almost at this double top now in the US dollar index, but because it's done it very, very quickly, the move out of the CD leg, usually when it comes out of there that fast, if you'll notice that right after the C leg was made, the next day was a big, big move in the US dollar. That usually signifies that it's going to go a great deal higher, much like it did if you look back when it was making the A point. You had that really big move and the market continued to move higher. That's what usually happens when these things accelerate. So we'll see. Okay, let's take a look here at a few of these other things that we got. The market should have opened quite a bit lower because, it's been in a situation where it wants to go a little bit lower. So we'll be watching it right now. Let's, the market, we made a little tiny retracement up there, 2667. So there should be some support, near that level. But whether it happens or not, remains to be seen. Okay, we will keep a close eye on the bonds, because the bonds are trading at that near the high of the day now at 139.14, and we want to watch that very, very closely, because if we can keep those bonds in this area here, they are a very good short sale, in my opinion. Now, there's also the possibility that they could make it all the way up to the 78% level. Let's just bring it up to date to see where we are here, so you'll be able to see it. And you'll notice that we could make that ABCD pattern up to the 40 level. But remember, this rally's been going on for 3 weeks and hasn't gone very far. So that's a sign that there could be some real interesting things happening at that point. So let's watch that one. That's going to be another interest. They're all interesting because we're in great volatility times, folks. We're seeing key moves in currencies, stock indexes, bonds, gold, silver. Only the commodities have broken down somewhat, but these are the ones that this is what you look for, is this type of volatility, and that's one of the reasons why we've been suggesting that you're going to see a great deal of volatility during October, because that's what happens when you get these times. Look how bad it was. Let's just bring this up so you can refresh your memory here. Look what happened in 2008. We're having virtually no volatility compared to what were happening then. I mean, we haven't had a 7% move. We've had a couple of 4% moves, but you can see these were big moves, and we're seeing the same thing in October. And remember, we got how many more days? We got 2 more days, 3 more days. We got the 29th, 30th, and 31st. first, and then maybe it'll slow down. Of course, coming into the midterm elections, there's going to be some wildness during that time too. So we'll be watching it very, very closely, to say the least. That's the main thing that we want to sort of keep an eye on. The stocks is still they've opened lower, which they should have, but keep an eye, because if we can get above the 2680 level, that's only about 17 handles from where we are right now. We could have put in a minor bottom down there at the 2645 level. That was nothing more. In fact, this is one of the ones. I'll just show you what I look at in the middle of the night as I'm watching all these things. We'll just get this up here to take a look at it, so you'll be able to see what I'm watching. And you'll see here that, one second here. Okay, you'll notice here, 5:30 in the morning, New York time, we were making this really little, is basically a 1.618 expansion of the ABCD pattern that happened in the middle of the night. That was a really nice move. Went from 76, 30 handles, folks. And all we did back then is we pulled back to a 61% retracement at 52, and that tells us we get to 2670. That means if we get above 2678, there's a chance that you could get a little bit more of a rally than what you're getting right now. So these are some of the things that you might want to keep in mind. Hold on here. We've got a caller coming in, and the silver 4 hours. What does the chart tell you about the silver 4 hours? You had some. I think I've got that posted in here. I believe once we went below that 60 level. Just one second, Mr. Z. I will see if we can get it. Silver just doesn't look bullish to me, but what do I know? Hold on a second here. Oh dear, I don't have the silver. I'm going to have to post that for you, Mr. Z. Hold on a second. It'll only take me a second. I'll get this out of the way here. Tile vertical. I've got to give me a second to get this stuff moving, and then I'll be all right. Hold, we go main. We go to chart. There's the silver. I'll do an hourly silver so you can see where we are here. Okay, we did take the silver out, and then we got a little bit of a bounce in here. This doesn't. I'll just bring this up to you. This. I'm not going to draw any lines in, Mr. Z, because I don't have the time. Thanks, John. Anyway, you'll see that we come down below the 78% level. We've rallied up again. During the night when the gold was going, trying to make new highs, we had 3 lower highs in there up at the 78% level. If we could get silver above the 1485 level today, that would be pretty constructive, I guess. But, on the longer term basis, it just is, and it's a very thin market compared to the gold, folks. It's only 1/6. The open interest, so that's a big thing to keep in mind. So let's take a little break here. 877-927-6648. We'll be right back.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today. Jason Path has just launched his weekly newsletter, The Quantitative Edge, available only at TFNN.com. Right now, you can sign up for Jason's outstanding weekly report, including midweek updates whenever warranted, with a 30-day money-back guarantee included, so you have nothing to risk. risk. Jason develops his trade recommendations by creating an ensemble of predictive and mathematical models trained on data by leveraging a variety of techniques, including market-based computer simulations. Jason then combines these sophisticated predictive and analytical models with deeply researched macro outlooks to identify opportunities in a number of different markets for traders to act on. Whether you're looking to trade futures, equities, commodities like crude oil and gold, forex, or cryptos, Jason covers it all. Sign up for Jason Paff's weekly trading newsletter right now by visiting the front page of TFNN.com, and you'll find the quantitative edge under the newsletters tab. TFNN.com, educating investors. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, brought to you by Nadex. Next on TFNN.
Okay, we're back, folks, and we're going to take a quick look here at the Hang Seng. You noticed that we had that big rally the other day. When we had our rally on Tuesday, we went right up into that gap where it gapped down. It didn't quite fill it. And then what we did is we reversed everything the next day. That was the day we had the big 600-point down move. That was on Tuesday. And then, of course, we've continued down. It gapped down again last night about 1%. It was down about 1.5% to 2% at one time, and it closed around 24,600. So we're quite a bit below those lows. There's really no buying pattern in here. So it's fun to watch, but frankly, I don't see any reason to get involved in this. There's really no pattern here to really look at. The really easy pattern was the 3-drive pattern. And of course, the market gapped down that day. There was no way you could have bought it because it would have gapped below your buying price and you'd have got filled near the low of the day. Unfortunately, you don't want to get those kind of trades. You'd have to cancel it to make sure, that's what you're looking at. Now, we've had a request to take a look at a stock that looks actually pretty good. I mean, this is one of the better stocks. If you had to buy anything, you want to buy the things that are looking pretty good. And frankly, the Boeing Airlines looks very good. It bottomed on the 22nd at the 78% level. Absolutely spot on, and it's had a very good rally. It's rallied from 342. It closed last night at 359. That's a bullish stock. Now, you'll notice the top that was made. If you'll notice the April low where we had a 3-drive to a bottom pattern, then you had the ABCD structure where you had the double top, then you pulled back to another 78% level. And that move, if you'll notice, the move between June and July was almost identical. In fact, it is identical to the move that we had during these 14 days in October. So that's very, very strong support in the thing. But we made the ABCD pattern up there at the 390 level, broke down to the 342, and by golly, it doesn't look too bad. If you had to buy anything, this would be the one to buy. That's what they say. Buy the strongest stocks, sell the weakest. And the weakest, of course, is Deutsche Bank. Boy, that one looks like that's falling off a cliff. But, cliffs sometimes you can hang on a little bit longer than you'd like to. I want to bring up one other one that looks interesting, folks, because we've been talking about this quite a bit because of the fact that it had such a bearish pattern. And if you follow the newsletter at all, you'll be able to see it, and that is the Dow Jones Transportations. You know that we had the double top up there. We made the little butterfly pattern. That was back on September the 12th. we broke down, we rallied up to a 382 retracement almost exactly, and then we broke down, and then we gapped down. That was the big day a week ago Tuesday, but look how close we are to the pattern, folks. This is right at a 78% level. That's why I don't see a crash scenario here. I mean, there's too many of these things that are, right near these targets that we're looking at. That's hey, it could be wrong, but that's the way I see it. And hey, there's nobody in the world more bearish than me, and but I'm not as bearish as I was at the top. Now we've had a big break, so you want to be looking at things that be covering some of these shorts because you're going to be able to see what's going on. Anyway, you're going to see some great swings, though. That's one thing we're going to see. Anytime you see these 7% swings, 4% swing, look at the NASDAQ yesterday, folks. On Tuesday, it's down 4%. On Wednesday, it's down 4%. On Thursday, it's up 4%. And it's down 4% today. So that's, what do you have, a 12% swing? That's not bad. You got to like that kind of stuff. That's good action. So just keep in mind that we are closer to the bottom than we are anything else. So I don't think that there's a crash scenario. The other thing that would be about a crash scenario is you'd be looking at the bonds would really be moving really strongly on the upside, because they would be giving you an indication that you're looking at a really good spot here. They're trading at 39.12. The high's been 39.16. They're not giving any indication that there's a any type of a problem or not. Now, just for on a quick purposes here, we just completed that ABCD in the S&P here. Let's just get this up here so you can take a quick look at it. And because this is just a 15-minute chart, because when the markets are crazy, you've got to move down to a 15-minute chart. And you can see you just completed that ABCD pattern up there at 2670. That's why I'm saying if you get above that 2678 level, that would be the high of that last move. That would tell you that you're probably going to get more of a bounce. Right now, all you've done is you completed the ABCD pattern from 6 o'clock in the morning, the 4-hour chart, or in 4 hours. It's taken that long to do it, but that's what you're looking at here. So just remember, that's just one of the things we're looking at. Let me quickly take a look to see if I wanted to know if the XAU gapped down today, just to be safe, just to see what happened, because no, it actually opened higher in the XAU, which is boy, it had a heck of a move down, 6% yesterday. So that's not usually a good sign, but we'll do one thing at a time here as we look at some of these things, and we'll go from there. Okay, one other question that someone had, and that was about, just one second, and I'll bring it up. So, here it is. It's this was Amazon, I believe. Already posted that one. Sorry, What was the low in Amazon today, folks? Can someone tell me? Because it looked like we had a chance to get down around that 1600 and change, as I recall. So whether that's going to mean anything or not, I'm not sure. Now we've just gone above the D point now in the S&P here. That means we're heading up to that 2678, folks. It's not nearly as bearish as you might want to think. So be careful in here. Remember, this market's down a lot, and if it reverses, you know what can happen. I'm not saying that's going to happen. So just do one thing at a time, and that's really what you're trying to do. The bonds are the thing to keep an eye on. One other one. I'm jumping around here too fast because there's so many good trades setting up that I can't do them all. So here's one that I really like, and let's just get this one up here. I'll move this over here a little bit, and this is give me a second here. Oh dear, I've got to turn off the limit minder because I can get by without that. Here's crude oil, folks. Pay attention to this one here. Okay, it did get to 1600. Thank you very much. If we can get that crude oil up about $1.20 a barrel, that is going to be what I think is a good short selling opportunity. So sort of pay attention to that right now. Just give me a second to turn off the limit minder in the S&P. Okay, we got that done. The key level today, folks, is that 2680 level in the S&P. If we can clear that, that's going to be a positive sign, and we could possibly have a pretty good move. Right, all we've done so far is just make the 78% retracement of the move. In fact, we're trading above it right now, which is also a positive sign. So that's another one that sort of, keep in mind, because if we can get it above 2680, then we might be looking at a pretty good reversal type pattern today, if it's going to hold that level. Oh my goodness, it's almost time for the final break. Anyway, it's going to be fun to look at these markets on Monday. Remember, it's the anniversary of the crash. I don't think anything's going to happen, folks. These anniversary dates, my good friend Twentyman has looked at all that stuff. He couldn't find any correlation in that. So let's take a little break here, and we'll pay a few bills, and we'll be right back.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools, as well as provide great market calls too. Sign up today.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics, including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, I'm going to post the last chart here is the weekly chart of the euro, because I think this is the one that will control a lot of the stuff that we're looking at. It's follow the principle, follow the money. And this is the U.S. dollar versus the euro. And if we get below that 113 level, which we're not very far away from now, and we close below that, that's going to break that 61% retracement from the low in April of 2017, and that would be extremely bearish. It would give a price objective of 106 in the euro. That'll be a game changer. That means the U.S. dollar index will be heading towards the 105 level, and that will be a big change in a lot of stuff, whether it's related to the tariffs or not. I'm not sure. but at least it's very important from an economical standpoint when you see these things break these key levels. They're very important. If you'll remember, when we were making that 135 pattern in April of last year, of 2017, that was a really great spot. And if you'll notice, it had that big gap up, if you recall, and then a little consolidation and continue to go higher and higher. So this is a game changer. So pay attention to that 113 level in the euro. Closing below that will be a very positive sign for the dollar, negative for the euro. And the same thing, we're looking at some of the other currencies. You know, the pound is broken down below the 61% retracement by quite a bit, and anything below 127 in the British pound sends it towards the 124 level. So these foreign currencies would really be under the gun here if this euro breaks this 112.50, say, in the euro. That going below that last low sets up that big ABCD. Now, sometimes they're a trap and they fail, but it's going to be very interesting, to say the least, especially today, today's close, because if we close really strong in the euro, that means it's got a chance. But any weakness, be careful. Live every day in an attitude of gratitude, and may God bless.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks!